Hello, everyone, and a very, very good evening from my side. My name is Ahmed Mumtaz, and I welcome all of you to this exciting and extremely important session through which I'm sure we are going to ace the double A March 2026 exam. This is going to be a very important session followed by multiple live sessions. Most importantly, one scheduled for tomorrow. So hang on and please try and concentrate for the next 2 hours approximately. And as a result of that, you will start feeling a lot better, a lot more confident, and you will be truly inspired and motivated that yes, you have got the potential, you have got the capabilities, and most importantly, you have got good enough time and you can actually ace this exam in the meantime. Okay, before I proceed, let me tell you something about this session. This session is divided into four parts. Yes, this session is going to be really important, relatively lengthy as well. So, this session will be divided into four parts. In the part one, I'll be very quick, but at the same time, I will go through what is this exam double A, what are the pass rates, what's the course structure, what's the exam format, how can you ace the exam, what mistakes you need to avoid. So, it's going to be an overall introduction about the paper itself. That's what the stage one of the today's session. In the stage two, I will share and I will guide you what needs to be done over the next 14, 15 days. So I'll give you a plan, the plan which I've created for my revision batch students. At VIFHE, we have got three different types of batches: regular batch, which starts after the ACCA exam, reset batch, which starts after the ACCA result, so somewhere in the middle of the quarter. Finally, the third and the final batch, which is called the revision camp, also known as the crash course, which has just begun. So I will share my plan for the double A in relation to the revision course. So that's going, I'll make you understand what is the plan. So that's going to be the stage two. Stage three is where I will teach you the drafting technique and the knockout punch and the marking scheme of one of the major topic, followed by our latest March-June 2024 past paper question. In fact, I'm going to handle a past paper question which is not currently available through the exam kits. It is only available through the ACCA's practice platform because it's a latest question. So this is what my plan. I hope everyone is clear. There are four stages. First stage, introduction of the subject, few tips and tricks. Stage two, a plan for the revision batch students. You can join and you can enroll the revision batch right now, today, as soon as possible. Number third, I will teach you the drafting techniques and the marking scheme for one of the major topic out of the three we have. And the fourth and the final stage will be a past paper question. All set. It's time for me to move forward towards the stage one. Okay. So, well, definitely all eyes are on Monday, 2nd March 2026. If you wish to enroll, you need to contact WIFI's admission department. You can do so by through a WhatsApp text. Otherwise, the best approach is to go onto the website and enjoy a seamless enrollment process, which is through the website rather than going for the WhatsApp text. Anyways, those that number and that website is super important if you are looking forward to join the March 2026 revision batch. Well, a brief introduction about me. I am currently teaching at WIFHE, which is a gold online ALP. I'm teaching BT, AA, and AAA. My AA and AAA are available in both Hindi, Urdu, along with that English language as well. I was part of the ACCA's official practice to pass webinars on five different occasions. I qualified my ACCA back in 2012, though I started teaching back in 2010. So it's been 15, 16 years that I have been teaching ACCA students, and it's been, well, 2013 was the year when I started double A for the first time ever. So if we talk about the double A alone, it's been good 12, 13 years. So that's a brief introduction about me. Yes, these are the few recent uh, nationwide position holders from Spain to Jamaica to Hungary to Sri Lanka, and the list goes on. So these are the position holders for double A, the recent ones through the VIFHE's platform, and these are the triple A position holders from from India to Saudi to Albania to Nepal, and the list goes on and on. So these are the few shining stars, and these shining stars are right in front of you so that you could get an inspiration and you could get a motivation. Well, in ACCA, definitely a pass mark is what we all are looking for. But if you could press a little harder, if you could be a little more disciplined, and if you could if you are going to follow the instructions properly, at the end of the day you can always score a position, and those positions are always important, and they do have a huge impact on your CV, and sometimes they create golden opportunities for you. Okay, moving forward from the shining stars, yes, the top performer in the entire Caribbean region to the first rank in India, let's talk about the pass rates of double A. Well, the pass rates of double A are on the rise, they are improving, but surely you cannot compare the pass rates of double A from FR or tax or even FM, because all those subjects, FR, tax, and FM, all those subjects have got a tremendous pass rates of 50 or sometimes more than 50%. For double A, let's talk about March 2024, 44%, June 24, 44, then 47, then dropped out to 44, 47, June 25, 44, September 25, the second last result, 46, and the very recent result was again 46%. So overall, things have improved. They used to be 38, 39%, on an average, hardly 40%. Now the average is approximately 45%. It is still on the lower side if you compare it with the FR exam, if you compare it with the tax exam, if you compare it with the FM exam, but things have improved, and I'm super delighted to be part of this success. And I'll tell you how can you achieve the pass marks easily, and how can you be the part of the successful students. Let's briefly talk about the course content. According to the ACCA's official study guide, there are 5 syllabus areas. Syllabus area A has got ethics and acceptance along with corporate governance. That's your minor topic, but it is very important. Syllabus area B is one of your major topic, audit, risk, and planning. Syllabus area C is about internal audit and internal control systems. Syllabus area D is about collecting evidence through applying procedures. Last but surely not the least, syllabus area E, which is usually the most underprepared topic by the double A students. It's called completion, review, and reporting. So A, B, C, D, E. There are 5 syllabus areas. The exam format itself is relatively challenging because there are only 2 sections. In the section A, you have to solve 3 OT cases. Each and every OT case will have 5 questions. So 5 twos are 10. And that's going to be the pattern for the second OTQ, another 10 marks, followed by the third one, another 10 marks. So overall 30 marks for the section A. 90% of the worldwide students will score under 18 or under 16 out of 30. 99% of the double A failures would fail the section A of the exam. Those double A students who end up scoring 60 or more, 65 to 75, those high achievers, they always score 24 out of 30 or sometimes more than that. So if you want to secure your double A exam, and if you want to avoid the failure at any cost, well, one of the golden tip from my side would be, don't compromise with respect to your exam preparation, especially in terms of the section A. How can you score 24, 22 out of 30 in section A? If you will target 24 out of 30, you might end up scoring 24 or maybe 22, but surely you will end up scoring 20 or more. So if you want to score 20, 22, 24, 26 out of 30, which is very much doable, hang on. Well, within the next 5 minutes, I'll guide you and I will tell you how can you score section A. At VIFHE, through my LMS, you will be given an opportunity to attend and watch each and every single lecture covering each and every OT case from the exam kit, and on top of that, the latest ACCA Study Hub content as well. So hang on. What about section B? There will be 3 CRQs. Each and every CRQ will have sub requirements, sub exam requirements. The first CRQ will have total 30 marks, followed by the question 2 and 3, which are going to have 20 marks each. Why students fail this paper? So the next 5 minutes are super important. Can you pass this exam on Monday, 2nd March 2026? Yes, you can. But is there anyone in your social circle attempting the AA exam? Can he fail it? Or is he going to fail the paper? Or is she going to fail the paper? Yes. But the question is, why students fail this exam? Well, students fail this exam, number one, because of their poor typing speed. Number second, their lack of exam practice. So if you are just reading the notes, if you're just attending the lectures, if you are just reading the question and the answer, and if you are conceptually crystal clear, but if you are not typing the same, once you have understood my lecture, once you have understood the marking scheme and the drafting techniques, once you have understood the entire answer drafted by me, and you're moving towards the next question without typing it at least once, ideally twice, you're creating a problem for yourself. You will have lack of exam practice. Your poor typing speed will end up, making you paying the price. So if you want to pass the paper, don't just rely on your concepts. Go for the hard work. Go for the some labor work, and that is you got to type the answer. And as a result of those typing, as a result of using the ACCA's practice platform for typing the same answer again and again, your typing speed, your exam focus will improve dramatically, and as a result of that, you will pass the exam. Number third reason behind the higher failure rate, for PM, tax, FR, FM, everybody is going to pay a lot of respect to the section A and B. Yes, students will pay respect to the CRQs as well, but they are going to pay a lot of respect to the section A and B, realizing that there are 60 marks available. For AA, everyone is obsessed about the CRQs. Yes, it has a huge weightage of 70 marks, but 30, well, 30 is a huge number. And imagine scoring 38 or 40 out of 70 in section B, and imagine scoring 6 or 8 out of 30 in section A. So the overall score is 46 or 48. You can criticize yourself for scoring, relatively lower on the lower side when it comes to CRQs, but the real painful part is you scored pathetic when it comes to the section A. So please pay respect to the section A of your exam. And if you are going to join the revision batch, you will have access to both the exam kit section A questions and the ACCA Study Hub. Choice is yours. You should attend, or you should solve 3 OT cases, ideally in the morning, 3 OT cases in the evening, using different resources, and you have to attend my lectures on the same, where I've discussed each and every option in detail. Knowledge based, it is important. From 10 to 15, any number can be there in your final exam within the section B. For knowledge based, the best strategy is, if you're preparing a CRQ, and if that CRQ has a flavor of straightforward bookish knowledge, do give respect to it as well. So you can prepare your knowledge base simultaneously on a daily basis. Don't keep a particular Sunday for that. Don't rely on a particular weekend, that on that weekend I will cover the entire straightforward bookish knowledge. That's not going to happen. Exam technique is important. The master file is important. Probably tonight I will be sharing the new master file, having a lot of new things in it. So yeah, hang on for the master file. and that master file will have so much more to offer. Don't ignore minor areas during the preparation. For example, ethics, for example, corporate governance, for example, internal audit, for example, going concern, for example, subsequent events, for example, audit report and the impact on the audit report. So these things are super important. And last but surely not the least, don't miss out the final mock exam. Mock exam is important. Don't just solve a mock exam. You got to make sure your mock exam is marked by an expert tutor and you actually receive a critical feedback regarding the mock exam. Only then you can actually enjoy and you can expect a sure shot success in your final exam. So these are the things which are super important, and I hope all of you have fully understood. Yes, if you're preparing for double A, you got to understand that each and every topic must be prepared from three perspectives. So if you're preparing audit risk, prepare the section A questions relevant to it, prepare the straightforward bookish knowledge relevant to it. Last but surely not the least, you got to prepare the application based questions relevant to it. If you are preparing a minor topic such as ethics and acceptance, the same story goes for a minor topic. You have to prepare the section A OT cases for the ethics and acceptance, followed by the straightforward bookish knowledge, followed by few application based questions such as orange financials. So this is how you got to prepare the double A. And how do I build success story? We still have got good enough time. We can work on the concepts and knowledge. Along with that, we will be heavily focusing on the drafting techniques, and with the help of the drafting techniques, followed by few live sessions leading towards the mock exam, you can actually pass this exam in flying colors. Just to share with you, today we have got the webinar day one, followed by tomorrow where we have got the webinar day two. Then we have a break on Friday, followed by another two sessions on Saturday and Sunday. And those two sessions on Saturday and Sunday would be relevant to substantive procedures. So this is my plan. I am done with the stage one. That was the stage one of the today's session. Now allow me to move towards the stage two, where I have to share the plan. What plan? Give me a second, please. Okay, all set. Give me a second, please. Okay, let's move towards the stage two of the tonight's session. And this stage two is super important and because this stage combines two things. A, I'm about to share a realistic plan with you. Not only that, along with the realistic plan, I'm about to share my top 30 CRQs as well. Now, those I've received so many messages in relation to the master file. Just give me some time. If you have this December 2025 master file, keep on using it. But if you could wait for a few hours, hopefully tonight at the end of this session, I will share the revised master file and the new master file for the March 2026 exam window, where I have added multiple knockout punches on substantive procedures and a lot more. More content for the audit risk, more content for the controls, and a lot more content for the syllabus area D and E. As of now, let's talk about the revision plan. So I am assuming that this revision plan is starting from Wednesday, 4th. Yeah, it's Wednesday, 4th February, not exactly Tuesday. This is a mistake, not exactly Tuesday. Okay, so it is starting from Wednesday, 4th February, and the final mock exam would be on 18th February. The final exam itself would be on 2nd March. Okay, these dates are important. Let's talk about this plan. So there are three stages: syllabus area A and B, which has got a weightage of 30% from 4th February to 7th February, followed by syllabus area C, which has got another 30% weightage, approximately 8th February to 11th, and then finally the third and the final stage where you have got syllabus area D and E from 12th February to 15th February. Now, what about 16th February? What about 17th February? Well, I am going to give you a plan for this. So, for the stage one, you have to cover ethics, and for that, you have to just prepare one question as of now, or in financials for ethics. For corporate governance, go for the saxophone enterprises, and then you have to focus on audit risk. When you will explore audit risk, you have to attend the lecture called Audit Risk Knockout Punch, followed by two live sessions. The two live sessions, which two live sessions? Well, the recordings are available through the LMS. And then these are the top 10 CRQs. As I just mentioned, through this document, not only I'm sharing my plan for the revision course students with those who are going to join now, I'm also sharing my top 30 questions. Now, those top 30 questions, all of them are available through the LMS. The lectures are available. Everything in relation to these questions are available through the LMS. For example, Corley appliances would be available through the recording of the live session one. Tonight, we will cover this brand new question, which is not even available in the exam kit. We are going to discuss this today in the webinar day one. All of these are latest and absolutely crazy past paper questions such as Knight Electronics, Green Company, Musitestic, Lapis, ESK, Magpie, and the list goes on. Now, stage two, this is all about internal control systems. Again, you will attend my lecture, which is about the knockout punch on the internal control system, followed by the live session number 3. Everything is, all the recordings are available on the LMS, including the CRQs. The CRQs, the top 10 are Silver, Francisco, Whittaker, and the list goes on. Castle Courier, we did that in the live session 3. Again, the recording is available. Harper, we are going to do tomorrow. And these are another set of top 10, followed by the stage 3, which is about syllabus area D and E. Knockout punch 1 on substantive procedure, followed by knockout punch 2 on substantive procedure, followed by knockout punch 3 on substantive procedure, which we did in the live session 4, followed by knockout punch 4, which we are going to cover after the webinars. So Wednesday, Thursday, excuse the Friday, Saturday. So this session is going to be on Saturday. Get ready for that. Followed by top 10 CRQs. And out of those top 10 CRQs, I think cook it. We are going to do it on Sunday, and probably one more. Okay. So everything would be available through the LMS. So this is all about your CRQs. Now the section A, as I've just mentioned, make or break. Section A. For section A, you cannot prepare section A on a particular weekend only. You cannot rely on a particular weekend for the section A. And you cannot assume that if you have prepared the top 30 CRQs, you will automatically ace the section A of the exam. Not at all. For the section A, I would recommend solve 3 section A questions in the morning, followed by 3 in the evening, and then attend my lecture on the same. Again, all the lectures are available on the LMS using the latest ACCA Study Hub content and the exam kit. So this is a very important portion, and make the best use of the Study Hub, make the best use of my lectures on the same. If you are not going to pay respect to the section A exam or section A of your exam, I'm telling you, this is make or break. We need to score 24 out of 30, and it's very much possible if you just start paying respect to this portion of your exam preparation. Oh, okay, on 16th, we will have 16th, or we will have grand revision, or maybe on 17th. So you have 16th and 17th as spare days. Then on 18th, you will have the mock exam. Then 1 week is required to mark the mock exams. So on 24th, we'll have the mock debrief session. Still, you will have 4 to 5 days before your final exam. So you can always improve, and you can always rectify little things which will be spotted and identified through the mock exam. You will not just receive the mark, you will not just receive the total number of marks. You will receive your mark script as well. You will not just receive 1 mark, 2 mark, 1 mark, 2 mark. You will receive comments as well, through which you will realize that what mistakes you have committed and in what areas you need to improve, and what are the fundamental mistakes you have committed. So the mock exam is going to be super, super important. So this is it. I am done with the stage 2. That was the stage 2. Guys, now if you have got any queries, please post it in the chat box. But before you do so, let me tell you that today is webinar day 1. I'll be discussing audit risk. Tomorrow is webinar day 2. I'll be discussing controls. And then we will have a break on Friday. And then on Saturday and Sunday, we will be heavily focusing on the knockout punch part 4 of the substantive procedure, followed by CRQs on the same. So get ready for that. And if you want to access that, you have to join the batch. Abdul Rafe, Nazneen, which are you talking about, this particular lesson? If yes, the answer is yes. Okay, so I think I have covered the stage 1 and the stage 2 nice and easy. Stage 1 was all about the AA itself, the course, the exam structure, the format. The stage 2 was about the top 30 questions along with a plan. What is the section A plan? Can you repeat the section A plan? For section A, you got to realize that all my lectures are available through the LMS. The exam kit lectures are available in bits and pieces at the end of each and every syllabus area. But for the Study Hub, you have to go down, and at the end of the LMS, all the Study Hub content is available under one umbrella. You cannot solve all the section A questions on a particular weekend. And you cannot watch all my section A lectures on a particular weekend either. So it's about slow and steady. It's about consistent rather than being aggressive. So daily solve 3 section A questions in the morning, and then attend my lecture on the same, so that you could understand why B is correct, why A is not correct, why C is correct. And then do the same in the evening, another 3 OT cases. So if you will start solving 6 OT cases per day, If you will start solving six OT cases per day, along with my lectures, I repeat, it's not about you just solving, it's about attending my lecture as well. You solve it as a test, attend my lectures, learn from your mistake. If you're going to do so over the next 13 days, six OT cases per day, you will end up finishing both the Kaplan exam kit and the ACCA study hub. I repeat, three OT cases in the morning, followed by my lectures on the same, three OT cases in the evening, followed by my lectures on the same. Over the next 2 weeks, you will end up finishing all the OT cases at least once. And then you can do the second round. You can repeat. You can start solving them all over again. And if required, you can always attend the lectures again. That will ensure you will end up scoring 24 out of 30 or maybe more. Is this clear? Can I have multiple yes regarding the section A plan? If you are somebody, if you are part of my regular batch or reset batch, you are already part of the revision course. In that case, you don't need to bother about the revision course. So I've got a lot of yes. What if we have already done the OT cases and your lectures? Then repeat them. I hope. Now track your score. Check it out. How much improvement is there? How many marks you are scoring? If you have covered both the exam kit and the study hub, try solving them all over again. Well done. Well done. Lovely. What about someone who does not have time to cover both study hub and Kaplan? Which one to do? Well, first of all, I would say, okay, skip BPP kit, but don't skip Kaplan and study hub. That's my first advice. Because if you will target the study hub directly, all my lectures are available. I have created lectures in such a way that each and every lecture will have one OT case from the study hub. So if there are 36 OT cases in the study hub, for example, there are 36 lectures. There is no one single lecture which has got two OT cases. No, one lecture covering one OT case for 10 marks, 12 to 15 to 16 minutes per lecture. So on an average, 15 minutes per lecture per OT case. But if you will target the study hub directly, there is a huge possibility you might be making a lot of mistakes. You might feel the questions are very difficult. So that is why I would encourage you to go from Kaplan towards the study hub. Is this clear? Study hub is definitely more important, but I would say go for Kaplan along with that study hub, or finish off Kaplan followed by study hub. I'm not a huge fan of going towards the ACCA study hub directly. If you have to divide the time between the two papers, well, 4 to 5 hours. Well, are you a full-time student? Then you should repeat the study hub, and along with that, you should solve the BPP kit OT cases. If there are, well, some of couple of students, those who are enrolled with me, they have already covered the Kaplan kit lectures and the study hub lectures. Those are available through the LMS. First of all, 2 thumbs up. Secondly, you can go for the BPP. Okay, if you're a full-time student, then at least 5 hours for AA, followed by another 4 to 5 hours for FM. Because if you're a full-time student, out of 24 hours, you've got to invest 1/3, which are 8 hours, but ideally speaking, 10 hours for your studies. So 5 hours followed by 4 or 5. So 5 plus 4, 9, or maybe 5 plus 5, 10. Clear. Okay, that's great. Sir, can you provide us recording of OT cases? The recordings of OT cases, whether it's about the Kaplan kit, whether it's about the study hub, even I've started the BPP kit as well. I've started to upload it as well. The BPP kit OT cases. everything is available for the VIFHE students. Whether you are part of the regular batch, reset batch, or even if somebody is going to join the batch today as a revision course student, all of you will have access to the same. No worries. Guys, I'm done with the stage one and two. Are you all clear for the stage one and stage two? Stage one was about the overall structure and overall introduction of the paper, what we need to avoid. And stage two was about top 30 and the plan. Top 30 and the plan. This document is super important, which is in front of you, which contains not only the plan, but also top 10 CRQs relevant to area D and E, top 10 CRQs relevant to area C, top 10 CRQs relevant to A and B. So overall, this makes a beautiful document. This document is called Double A Revision Batch Plan along with the top 30 CRQs. And if you're a regular batch student and you need a revision plan, this is the plan for you. If you're a recent batch student and you need a plan for the next 14, 15 days, that's the plan for you. And if you're someone who is considering and you want to join my batch, and if you want to ace the exam on Monday, 2nd March 2026, well, this is the plan for you. And this plan is focused on the mock exam because I believe the mock exam will make you pass the final exam. I always say assignments, which are the tests, they make you prepare for the mock, and mock exam make you pass the exam. So you got to target the mock exam so that you could pass the exam. So this is a very, very important document, and definitely I will share this document. Is it mandatory to have a glance of examiner report in ACCA website? Yes, you can read 2 or 3 latest examiner reports, and they will give you a lot of confidence and a lot of clarity. But you don't need to read 10 examiner reports because the course structure and the paper pattern and the exam format remains the same. So there is hardly any unusual discussion. But if you could read 2 or 3 latest examiner reports along with those questions, obviously you got to solve the question, then it is going to be very, very helpful for you. So for example, out of this top 10, this Pimento company from March, June 2025, this Musitastic company is the latest question, this Green company is these are the questions which I'm about to highlight. These questions are not even available in the exam kit because these are super latest questions. So considering the fact these are latest, these are not available on exam kit, but are only available exclusively on the ACCA's practice platform. So you can always read the examiner report for these questions. These are the super latest questions. So guys, if you want to, you can definitely read the relevant examiner report, and those are going to be super helpful. Okay, I think I should move towards the stage 3 now. How should we divide our time between the audit risk controls and substantive procedures? Oh, this is the plan for you. 4 days for the syllabus area AB, 4 days for the controls, 4 days for the substantive procedures. Still, you will have 2 spare days, 16th and 17th February. Well, effectively speaking, 18th as well. And then on 18th, you will have the mock. Are you clear? Sir, please share the document with us. Rafe, you can bet on it. I will do it after the session. Shireen, are you clear regarding the examiner report? Abdul Rafe, are you clear? Milhan, are you clear? How can you divide the time? This plan does not only cover the top 30, it is based upon the timeline as well. So check this out. It's about this table not only covers the approximate exam weightage, but also the time as well. Okay, thank you very much, guys. I've got a comment from Almas Fatma, and she's saying, sir, kindly proceed. Thank you, Almas. Thank you. That's great. Okay, give me a minute, please. Stage 3. Okay, guys. So it's time for me to move towards one of the core exam topic, which is called audit risk. So if you are going to attempt your paper in the morning slot, in the evening slot, no more remote exams anymore. So if you are going to be a student appearing in the March exam window, June exam window, September exam window, December exam window, there are multiple certainties about double A. I said there are multiple certainties about double A. And one of the certainty is, one of the sure short thing is, when you will appear and when you will attempt your final mock exam, which is super important, and when you will attempt your final exam itself, mind you, your mock exam will make you pass the final exam. So when you will attempt your final exam or final mock exam, you will definitely, surely face a particular exam requirement. Now, what is that exclusive exam requirement? Well, the examiner would provide you a certain piece of information. 80 to 90% of the information would be in the descriptive form. So those would be in the form of multiple paragraphs. Along with that, probably a certain chunk of financial information as well. You will be an audit manager or an audit supervisor, and you will use the information provided. And once you have read the entire information along with the financial information, you have to describe 8 audit risks. Along with that, you have to express what's going to be your response now. So for this particular paper, for this particular exam requirement, one of the greatest or one of the most important tip or hack is think like an auditor, don't think like a management. You are not the finance director. You are not the financial controller. On the contrary, you are the audit manager or the engagement partner or the audit supervisor. In short, you are an auditor. So if you're an auditor, using the information provided, you will identify one particular audit risk. You will explain that particular audit risk. So once you have described the audit risk, you will score 1 mark. But examiner will not allow you to move forward towards the next audit risk. Examiner would ask you in the real world, doing the real audit, if you will identify a particular audit risk. Okay, I appreciate you have fully explained it. So you have described the audit risk. Would you move forward towards the next big fish? No. You have to come up with a plan. What needs to be done against that risk? You are an auditor. So if you will spot something, you're a skeptic person. So if you will identify something, are you going to just let it go and move forward? No. You have to come up with a response. Response means what's your plan of action against the risk? What are you going to do about it now? So this is an exam requirement, which is a certain exam requirement, a sure shot exam requirement, which every one of you will face in the final exam, irrespective of the time, month, region, whatever. Now, how are we going to tackle such questions? First of all, you got to understand, if the examiner would ask you for 8 audit risks, it means 8 multiplied by 2, there are total 16 marks available. If the examiner would ask for 7, automatically it means there are 14 marks available. Another certainty is, examiner will always give you a number. Examiner will tell you that I want 8 audit risks to be described, or 7 or 6. Examiner will always come up with a number. And if the examiner has asked, for example, the most common number is 8. So let's talk about 8. If examiner would come up with 8 audit risk, you should not write about the 9th one. If you are absolutely well prepared for 9 or 10 or maybe 11, don't exceed. If the examiner has asked for 8, just stick to the 8. If you are unsure about the first one, don't write about it. Write the best 8. Don't write an extra point, because if you will end up writing 9 points, and imagine your first point is incorrect, followed by 8 correct points. So from second point to the ninth point, your 8 points are correct. Examiner asked for 8. Overall, you wrote 9 points. Marking team, the examination team, they will not even going to glance the ninth point. Let alone they are going to read it. Let alone they are going to mark it. The examination team will only read and mark the first 8 points. So it is an absolutely rubbish idea to write an extra point. When the examiner has said describe 8 audit risks, stick to that. Don't write about the ninth point. Don't write about the 10th point. So this logic and this philosophy goes for ethics question as well, for corporate governance as well, for direct controls and test of controls as well, for deficiencies and recommendations as well, because all those questions have got one thing is in common, and that is examiner will come up with a number, write down 3 ethical threats, 4 corporate governance deficiencies, 5 deficiencies, 5 direct controls, 8 audit risks. When examiner comes up with a specific number, don't overwrite. Don't write an extra point, even if you are absolutely well prepared for it. Don't. Simply don't. There is one topic where examiner will not categorically mention a specific number, and that is your procedures. So for substantive procedures, examiner will not say describe 7 substantive procedures which the auditor need to apply in order to gather sufficient appropriate audit evidence. Examiner never comes up with a number when it comes to procedures or when it comes to bookish knowledge. So yes, when it comes to procedures or for the bookish knowledge, if you are unsure, only if you are unsure, you can actually write extra. So for example, if I'm writing procedures and there are total 5 marks, and if I'm going to write 6 procedures, assuming my first procedure is incorrect, followed by second, third, fourth, fifth, sixth being correct. So the examination team will not give me any credit for the first one. They will consider or they will assume that I have not attempted it at all. And because second, third, fourth, fifth, and sixth are correct, I will end up scoring 5 out of 5. That is only applicable where examiner does not mention a specific number, and that only happens where the question is about procedures. Unlike audit risk, unlike controls, unlike ethical dilemmas, unlike corporate governance deficiencies. So please take care of it. This is a very common mistake which students tend to commit all around the globe. They tend to overspend time when it comes to the first question. They tend to write extra points. I don't know why. So I hope this point is clear to everyone. Yes, you can copy paste. Okay, that's great. So guys, can I have a quick yes from majority of you regarding this? Are you absolutely clear regarding this point, which I just shared, that you need to write only specific number? Thank you very much, everyone, from Fatma to Martin. Everyone, thank you very much. Thank you for the quick response. Okay, let's move forward. And how are you going to write your answers for audit risk and response? Well, examiner, when it comes to your final exam, when it comes to your mock exam, your examiner will come up with a table. That table will have 2 columns. Those 2 columns will not have any heading. So you will copy audit risk from the question itself and you will create a heading for yourself. Similarly, auditor's response. Don't even type it. So you need to create 2 headings for yourself, audit risk followed by auditor's response. Now, when you will start writing your answers on the final exam day, you are not going to create step 1, step 2, step 3. Not at all. You are not going to highlight your answer with a particular color, not at all. But this is what I always educate. This is what I always endorse and I always encourage and highlight, because I want you to absorb those steps and I want you to learn those steps so that you don't miss out anything. Now, when you will start answering your question, you will identify the audit risk. That's your step number one. How would you identify the audit risk? You will copy the information from the question, even if it looks a little overwhelming, a little extra information, but you will copy that piece of information from the question paper and you will paste it on your answer sheet. And that's your step number one for the audit risk. You have identified the audit risk. Now, with the full stop, you should press the enter button and you should move towards the next line. And now you have to develop your point. Your examiner will give you maximum credit or full credit once you will develop your risk, once you will develop your point. Now, develop means present your case. Prove me, I'm the marker, I'm a layman. Prove me that indeed it is a risk. So when you will start developing your point, you should think, who are you? You are an auditor. So you have to be skeptic. So you have to explain why is it a risk? Why you think that the client's accounting treatment is wrong. You can actually take help of the accounting standard as well. So this is what the standard says, but there is a risk that client did not do that. So this is how you explain why is it a risk. And then finally, you can actually press the enter button and you can move towards one last sentence, a brief sentence, or you can always continue with that as well. And you have to highlight which financial statement items would be understated and which financial statement items would be overstated. So if you are going to fulfill or complete all these ingredients, you will end up scoring full 1 mark. Identify the risk from the question, explain as an auditor, think like an auditor, why you think that there is a risk or why you think that the client's accounting treatment is wrong. And as a result of that risk, or as a result of that incorrect accounting treatment, or as a result of that risk of incorrect accounting treatment, which financial statement items would have an impact? Which one would be overstated? Which one would be understated? And then for the next 1 mark, you have to go for the auditor's response. Now, guys, listen to me. If you will just write, why is it a risk? And if you will miss out the impact, you will not score 1 complete mark. And if you will identify the risk and straight away jump towards the impact without discussing why is it a risk, again, you will not score complete 1 mark. So let me give you an example. For example, the question says, the client's year end is 30th September, for example, and in the second week of August, there was a flood which damaged a lot of inventory. That's it. I am going to I'm going to copy all this information from the question that during the year, there was a flood and a bunch of inventory got damaged. I'm done with the step 1. I've identified the risk from the question paper itself. A poor student might say, as a result of that, the year-end inventory could be overstated. So the student has skipped why is it a risk and directly jumped on the impact. The student will not score full marks. Okay, another student. Before the year end, there was a flood, and as a result of that, a bunch of inventory, a certain inventory got damaged. There is a risk that though that portion of inventory might not be sellable anymore, the NRV could be below the cost. That's it. The student will still not score full marks because the student has discussed why is it a risk. IS2 says inventory has to be valued at lower of cost NRV. There is a risk that the inventory got damaged and the NRV is not that great anymore. The NRV is below the cost. So the student has discussed why is it a risk, but the student has not discussed as a result of that, there is a risk that year-end inventory could be overstated and the expenses could be understated because the inventory needs to be written off in the profit or loss account as an expense. So guys, if you will miss any one part, you will not end up scoring full marks. A good student, a well prepared student who's going to follow my instructions over the next 14, 15 days, he or she would write, well, a bunch of inventory got damaged due to the flood. This is the piece of information she's going to copy from the question itself. Now, my student would say, according to IS2, inventory should be valued at lower of cost NRV. Because of the flood, there is a risk that inventory items are not sellable anymore and the NRV is below the cost, or the NRV has gone down, or the NRV has dropped down, anything. There is a risk that the year-end inventory would be overstated and the profit would be overstated if management is not going to make the adjustment. Now the student has fully developed the point and she or he is going to score complete mark. Now, what about the response? Response means what auditor is going to do now. So once you will attend all my lectures regarding the substantive procedures, especially the knockout punches, you will automatically understand auditor's response is same as a procedure. So when you are going to write the response, please think like an auditor. You are an auditor. What are you going to do as an auditor? You're not going to offer a sale on the damaged items. You're not the management. You have to think like an auditor. So as an auditor, I would review at what price those damaged items were sold after the year end, and I will compare that price with the year end cost so that I could make a comparison of NRV with the cost. If there is an adjustment required, I will definitely have a discussion with the management. But before that, I need to review the price at which the company is offering it for sale, or at the price at which the company actually sold it off. So response means an action which has to be directly related with the risk. So this is how we are going to tackle audit risk and auditor's response. Majority students will either skip why is it a risk, or they will skip the impact on the financial statement items. And that is why I always encourage my students to identify the audit risk and highlight it with a yellow color. Then write why is it a risk, a simple sentence, a brief sentence, and then highlight the impact with a green color so that it becomes your second nature and you don't miss out any impact whatsoever, any point whatsoever. So these are the things which you need to make sure of. Okay, now let me move forward. Give me a second. The detailed lecture is available through the LMS. As of now, I am going towards a very important example. Now I've got two examples which I can actually cover. This is the first example, which is about receivable. But let me go forward towards the example two. Sorry. Okay, example two. I have skipped the example number one and I am moving forward towards the example two. What is example two? Imagine you are solving a question, one of the top 10 questions on audit risk. Let it be Lapis, Magpie, Green Company, Knight Electronics, the list goes on. Now, imagine you read a question and you realize that the question says the client operates in a fast-paced industry. So maybe in the fashion industry, clothing industry, tech industry, laptop, cell phones, whatnot. So the client operates in a fast-paced industry. Imagine I am your poor student. Imagine you are the good student. The poor student will identify the risk using the copy paste technique from the question itself, and that is going to be the good student will do the same as well. So both the good and the poor student will identify the information using the copy paste technique from the question paper. Now, this is not the main issue. Agreed. Now, the good student will start developing the point. The good student will recall that Ahmed sir used to say that identify the risk using the copy paste technique and then develop the point. And Ahmed sir used to say that first of all, write why is it a risk, and then end your answer with an impact on the financial statement items. So the good student will remember that there are two things which needs to be discussed now. Why is it a risk and the impact? And if you combine both, we call it the development of the risk or the develop the point. So good student will say, in a fast-paced industry, inventory may quickly become obsolete if not written off. So there is always a risk in the fast-paced industry that fashions and trends will change so dramatically and so quickly that certain bunch of inventory or the laptops or the accessories, I don't know whatever the nature of the business is, those items could become obsolete. Now, if they become obsolete, according to IS2, inventory has to be valued at lower of cost or NRV. If they are going to become obsolete, the year end, if the management is not going to write them off, those needs to be written off. If management is not going to write them off, the year end inventory would be overstated and the profit would be overstated as well. Or the year end inventory would be overstated and the expenses would be understated. So good student will make sure of everything, identifying the information from the question. Why is it a risk? Because the fast-paced industry might face obsolete inventory. And according to IS2, inventory should be valued at lower of cost NRV. And then the impact. So good student will take care of everything. What about the poor student? Let's check out the poor student. So the poor student says the client operates in a fast-paced industry. That's all right from the question itself. In a fast-paced industry, inventory may quickly become obsolete. Inventory may become obsolete. Now the problem is you have to think like an auditor. You have to think that if inventory would become obsolete, management must write it off. If management is not going to write them off, the financial statements would be materially misstated. Think like a skeptic auditor. But if you're thinking like a management, if you're thinking like a consultant, in the fast-paced industry, inventory may become obsolete, so management should offer discounts so that they could sell them off. No, you are not an advisor. You are not a business consultant. So you should not think about it. For example, a student says, in a fast-paced industry, inventory may quickly become obsolete, which means the company's inventory needs to be written off and expenses would rise. You don't have to think about the expenses of the company. You don't have to think about the profitability of the company. You have to think whether the financial statements are reflecting a true and fair view or not. You have to think which financial statement items would be over or understated. So if a student says, if obsolete inventory is not written off, the year-end inventory would be overstated and expenses would be understated. That's audit risk. But if the student says, if the inventory would become obsolete, in order to avoid that, the company could offer discounts. They could go for the promotional schemes. Otherwise, they will face massive losses. They will lose the future sales. That's not the correct answer. So always discuss the impact on the financial statement items, which items would be under or overstated. You should not write about the company's profitability or the company's strategy. This is not an advisory role. So we are not going to give any advice. Many AA students would write that management should give discounts. They should offer buy one, get one free offers. They should go for heavy advertising to get rid of the obsolete inventory. No, we are not going to write any such thing. So if the student says inventory will decrease, expenses will increase, that's a poor answer and examiner will not give you credit for that. On the contrary, if the student says If not written off by the management, inventory, don't say decrease, don't say increase, inventory will be overstated, expenses would be understated. Now that's your perfect answer. So these are the things which you need to understand, that how are you going to frame your answer. Now let's talk about the response. Again, good student versus poor student. Imagine a poor student would say in the response, what is going to be the auditor's reaction? I am the auditor and my reaction is the company should discount the inventory. The company should offer a promotional scheme, a brand new advertising campaign in order to sell it. Is this a good response? This is not a good response, because you are advising something to the management. This is something which the client would do. This is something which the client has to think. This is something which the management would perform. This is something which a business advisor would advise. You are an auditor. You have to think about which financial statement items are overstated or understated, and you have to verify that. So this is a wrong response. What about this one? I will attend the inventory count. As an auditor, I will attend the inventory count. Inventory count is an activity, it's a procedure. I will attend the inventory count. But why? To confirm the existence of the inventory. Right now, we are not bothered whether
The
the
slide is
inventory
not moving.
Okay, give me a second. Guys, can you please let me know, is it working okay now? Give me a second. Okay, guys, is it working now? Is it working now? Okay, that's great. Thank you. Thank you. Now, back to the auditor's response. So if the response says attend the inventory count to confirm existence of the inventory, are we bothered about the existence of the inventory? Not really. We are bothered about the valuation of the inventory. Now, again, this is something you will have a lot more clarity when once you have covered my lectures regarding the substantive procedures, that what do I mean by the existence of the inventory and what do I mean by the valuation of the inventory. So if I say I've got 4 plants, and here we are, plant 1, plant 2, plant 3, plant 4. So all 4 exist. Okay, that's great. A sigh of relief. 4 plants recorded in the non-current asset register. 4 plants are there physically as well. So the existence is there. But what if one of the plant is damaged? One of the plant is significantly impaired. So maybe the plants are not valued appropriately. So existence is something else and valuation is something else. Those are different assertions. So as of now, if I'm going to attend the inventory count, that will only confirm the existence of the inventory. So again, this is not a valid response. So for example, my client has recorded $100 of inventory, and if I'm going to attend the inventory count, there are inventory available over there, $100. So this is not a valid response. What if the cost is 100 but the NRV is 40? And what about the IS2? IS2 says inventory has to be valued at lower of cost or NRV. So the cost is 100. The company had a plan of selling it off for 140. But unfortunately, because of the damage or maybe because of the fast-paced industry, maybe because those items become quickly obsolete, out of fashion, now the NRV is just 40. So yes, $100 cost is there, and yes, the items already exist. No problem with that. So you will not be able to verify whether the inventory needs to be written off or not by just attending the inventory count, because the issue is in relation to the NRV. So inventory count is a procedure, yes, but as of now, according to the risk, it will not score any mark. Inventory needs to be written down to the NRV. So the issue is relevant to the NRV, not the value, not the existence of the inventory. So issue is valuation of the inventory, not the existence of the inventory. So The response to attending the inventory count, the response to attend the inventory count only confirms existence and not the valuation. So it should be um, reworded. You have to change your wording and you have to say that I will attend the inventory count and I will identify and look for the old or obsolete items. And then I need to have a discussion with the management that these are obsolete, expired, out of fashion, and they need to be written off. So your wording will make a huge difference. So the perfect answer would look something like that. The student would say that the client operates in a fast-paced industry, and in a fast-paced industry, inventory may become quickly obsolete if not written off. IS2 says inventory needs to be valued at lower of cost or NRV, so the year-end inventory could be overstated and expenses understated. And a perfect response would be that I will obtain. I am the auditor. I've got the authority. I will obtain a document from the client, an accounting record, and that is aged inventory listing. Similarly, there is a thing called aged receivable listing. Similarly, there is a document called non-current asset register. So depending upon the situation and the type of financial statement item, I will obtain the relevant document. So as of now, because I'm talking about inventory, I will obtain the aged inventory listing. Why? Okay, I've got the age inventory listing. Here I have the age inventory listing. Now what? I am interested in aged inventory. I want to review the old items. Why? Because I will discuss with the management that these items are too old. You guys operate in a fast-paced industry. These bunch of items have gone obsolete. So can you please write them off and write them down in the financial statements as an expense? You need to de-recognize the inventory. You have to credit the inventory and you have to debit the profit or loss account as an expense. Now, this is a perfect response. I'm not going to do it on my own. I'm not giving them any advice in relation to their business operations. I'm just bothered about the numbers being true and fair. And I'm just having a discussion with the management. So this is a perfect response and this is a perfect answer. Why is it a good response? Because it is focused on the old items because of the fast-paced industry. So your response has to be in line with the question itself. Your response does realize that there is a risk that the items have gone obsolete and they need to be written off. So this procedure, this auditor's response is truly focused on the valuation and not on the existence or the completeness or any other thing. So valuation was the main risk. So this is it from my side. I am done with this. Obviously, I've not covered the full knockout punch on audit risk. I had to skip a lot of things because uh, the detailed lecture is available through the LMS, but still somehow I've tried and I've covered a lot of important things in relation to the drafting techniques and the marking scheme in relation to the audit risk. So I am done with the stage 3. Now I should move towards a question, but before that, let me quickly check out the chat box if I've missed anything. Okay, nothing. Okay, that's great. So here we go. Okay, guys, now it's time to move forward towards the final part of this session. So far we have, I won't say thoroughly, but briefly discussed what is audit risk. Let me tell you, audit risk is the risk faced by the auditor. So think like an auditor. There are two components of audit risk. Number one, risk of material misstatement. Number second, detection risk. Risk of material misstatement means that there is a risk that certain financial statement items could be either over or understated. And if the auditor is not going to spot that, and if the auditor is not going to pick them up or identify them properly, auditor might miss them out. And because those are material misstatements, As a result of that, auditor would end up expressing incorrect audit opinion. And that's what audit risk is. The second component is called detection risk, where auditor might not be able to gather sufficient appropriate audit evidence due to lack of knowledge, inexperience, workload, time pressure. It could be anything. So the risk of material misstatement has got to do with the client. So it's a client specific risk, and detection risk is an auditor specific risk. Anyways, we have discussed what is audit risk. We have discussed the drafting technique. We have discussed a lot of important things. Now it's time for me to move towards our latest past paper question from March-June 2024. So this question is called Pimento company, and this is a recent past paper question. So let's explore this question and let's go towards the exam requirement first. The part A says, explain the responsibilities of Coronado and Company under the ISA 240, the auditor's responsibilities relating to fraud in an audit of financial statements. So in simple words, if you are working in KPMG or PwC or EY, what is the responsibility of your firm in relation to the fraud? So auditor's responsibilities relating to the fraud in an audit of financial statements. So if I am KPMG and if I am doing the audit of ABC company, what are my responsibilities in relation to the fraud? Now the breaking news is the question says you do not need to refer to the scenario to answer this requirement. Is there anyone who could let me know through the chat box what does this particular statement highlights? There are 4 marks. I want to know that once you have read this particular note, what did you learn, or what does that mean? Absolutely spot on, guys. You're absolutely right. Yes, SBK, I call it the straightforward bookish knowledge. So this part A has got nothing to do with the question paper itself. So if you have not read this entire question, well, good news is you don't have to, because the examiner says you do not need to refer. So you don't have to refer to the question. You don't have to read the question itself. And for those 4 marks, you need 4 solid points, because 1 solid point will earn you 1 mark. And if you could write 5 points, good for you. You can actually write 5. Maybe the first point is slightly inappropriate. So you can actually write an extra point over here. But ideally speaking, think about it, plan the answer, write down 4 points and move forward. Now, many AA students would ask me very regular and a very common question, sir, how should I prepare straightforward bookish knowledge? Second question, how often I should prepare straightforward bookish knowledge? Do I need to just read those answers on a daily basis? Do I need to rote learn them? Do I need to type them? I always say, yes, my file, which is called straightforward bookish knowledge, it's an important file, but I always say that the best approach for the straightforward bookish knowledge is small little efforts, but on a daily basis. So to be very honest, even starting from today, not from tomorrow, if you start respecting the section, the straightforward bookish knowledge from today, you will end up preparing, I believe, 30 different straightforward bookish knowledge. Because if you will prepare my top 30 at least, it means you have prepared top 30 CRQs. And if you have prepared top 30 CRQs, you will definitely face 30 straightforward bookish knowledge exam requirements, because each and every CRQ always has a straightforward bookish knowledge. So don't just focus on the part B. Don't be obsessed about the part B alone. give respect to the part A as well. I will try and cover not only the part B in this lecture, but I will try and give respect to the part A as well. The part C is about procedures, which I'm not going to discuss right now. The part B is a very, very underprepared topic because many AA students would ignore ethics. Ethics is a super important topic. If you want to be absolutely sure shot about ethics, go and prepare Orange Financials. Go and prepare the last part of hurling. Go and prepare the test your understanding 1 and 2 relevant to ethics. Those 3, 4 questions will make you absolutely well prepared for ethics. And not only that, this question has got 4 ethical threads. So these 4 ethical threads will make you absolutely well prepared for ethics. Mind you, you need to identify 3 ethical threads, which means it's a criminal offense to write the 4th or the 5th point. When examiner comes up with a number such as 3 ethical threats, do not overwrite. Do not write an extra point. Similarly, when examiner says describe 8 audit risks, even if there are 9 or 10 or 11, for example, in this question, there are 10 audit risks, do not write the 9th point, stick to the number. But when it comes to substantive procedures, examiner says describe procedures to obtain sufficient. So there are 4 marks. You can always write 5 or 6 procedures if you have got 5th procedure in your mind. But the better option is to plan your answer and write 4. But you can actually write an extra procedure when it comes to part C. So I'm done with the exam requirements. I hope everyone is clear. This is a very typical exam requirement, having a bookish knowledge, having a core exam topic such as part B audit risk, having a question on procedures, and having a flavor of a minor topic such as ethics. If you are looking forward to similar questions, go and check out my top 10. I'm sure within those top 10, at least you will find 2 or 3 similar questions where you will have same to same pattern, where part A would be bookish knowledge, part B would be on audit risk, part C would be on procedures, and the last part would be on ethics. As per my memory, there are at least 2 or 3 similar questions. At least one of them is hurling, and a couple of more questions as well. Okay, let's start reading the question. But before I actually start the question, I want to highlight 2 things. A, at the beginning of the question or in the early part of the question, there is a huge possibility that examiner would come up with difficult circumstances. But as we will progress and as we will go deep down into the question, we will realize that the question itself is getting a lot easier. So this is something which I want to highlight. Secondly, if I am going to read a particular portion of the question, for example, let's go for the 6th point. Let's go for the 6th point. Now, if this 6th point is something which you have studied in some other CRQ as well, I want all of you to participate in the chat box, especially those students who have already prepared my top 10. I want you to participate. Not only you have to, you have to recall it through your brain, you have to use the chat box and let us know that is it a new audit risk or is it an old audit risk? You can write just new or old. You can just write N or O. So new and old. Now, when I say new, it means this is a risk which we have never ever seen in my top 10. I'm only talking about the top 10 questions. Within the exam kit, there are 15, 16 CRQs. If you are using my VIFHE LMS, there are 24 or more CRQs. The lectures are available. But I'm not asking you to prepare all of them. I'm not even asking you to watch all those lectures. I am just asking about the top 10. So if you have covered my top 10, and if you realize that this 6th point is an old audit risk, and you have already prepared it, you actually typed it once or twice, you practiced it, you are confident and familiar with the risk, familiar with the response, you have to write in the chat box old, otherwise new. So these are the 2 things. Number 1, difficult portion will be at the beginning of the question, followed by easier ones as you progress through the question. Second, you have to respect the old versus new philosophy. Let's start the show. And okay. Azim is asking, kindly repeat question names for ethics. Number one, Pimento Company. Number second, Hurling Company. And I'm sure other students can help you out. I'm sure there are a couple of more questions or one more question which is available within the top 10. So just prepare the top 10. Top 10 in relation to the audit risk, or automatically ethics would be covered. Okay, welcome. Let's go. It is 1st July 20x5. Who am I? I'm the audit supervisor and I'm planning the audit of this P company for the year ended 31st August 20x5. Today is 1st July. So full July followed by the full August, then the client's year end 31st August. The company is a retailer of food and household items with a large network of stores across the country. Okay, forecast profit before tax is 18.8 million. The audit manager held a planning meeting with the finance director and has provided you with the following notes. So you have to make the best use of this information and you have to identify the audit risk using the copy paste technique. Then you have to discuss why there is a risk, and then you have to write the impact on the financial statement items. This is the drafting technique for the risk of material misstatement. For detection risk, we are not going to write the impact on the financial statement items. And then the response. Okay, so all set, let's go. Okay, so this company's internal audit department conducts an extensive program of controls testing across the network of stores. So the company has an internal audit department. This first sentence is not about me. I'm the external auditor. The company's internal audit department conducts an extensive program of control testing. So the internal audit department is very active and they actually perform a lot of control testing across the network of stores because they've got stores across the country. They've got a large network of stores across the country. So their internal audit department is very active. Internal audit department aims. Now, see, once they have expressed that this internal audit with the mnemonic, with the abbreviation IA, now they will keep on writing IA. So IA, which is internal audit, aims to visit every store over a 24-month period. The audit manager has obtained permission from the finance director for the external audit team to rely on the controls testing undertaken by internal audit. So the external auditors are going to rely on the controls testing performed by the internal auditors. Guys, this is something which is looking really difficult. And as I mentioned earlier, psychologically speaking, at the beginning of the question, your nerves have not settled. Examiner would try and come up with a complicated issue, especially at the beginning of the question. So that's what the examiner has done over here as well. Examiner would try and come up with a complicated information, especially at the start of the question, just to make sure that you get a little panicked. Now tell me, what is it? Is this a risk of material misstatement, or is this a risk of material misstatement, or is it going to create a detection risk? Can you tell me? The external auditors have decided that they will rely on the work performed by the internal auditors. There is a risk. What if the work performed by the internal auditors are not appropriate? What if it is not What if everything is not fully covered? So this is not about a risk of material misstatement. It is about detection risk, because you as an external auditor, you might be relying on the work performed by the internal auditors. What if that work is not well planned, not well documented, not well executed? So please realize it's a detection risk. So at the end of my answer, I will not write that that piece of financial statement item would be overstated and that will be understated, because this is not a risk of material misstatement. Now, how would I frame this answer? Okay, this is the entire piece of information which is extracted from the question paper itself. So you don't have to worry a lot about it. Now, okay, if the reliance is placed on irrelevant or poorly performed testing, there is a risk that the control testing performed by the internal auditors are not well planned, not properly executed. Then the external auditors may be relying on incorrect conclusions. Internal or external auditors might assume that the controls are very strong, very good, but as a matter of fact, they are not. So this could result in the audit team performing insufficient substantive testing. Guys, again, the entire syllabus has to be in your mind once you are reading or once you are listening to me. As an auditor, we have got two different procedures. Test of controls, where we test the control systems, followed by substantive testing, where we test the financial statements. As an auditor, if I will assume or if I will reach the conclusion that the controls are absolutely flawless and they are superb, I will automatically reduce my substantive testing. Please try and understand, this is highly conceptual and it is super important for your future. In the real world, auditors have got two different procedures. Number one, test of controls, where we apply certain actions so that we could verify whether the controls are operating effectively or not. Once the auditor is confident that the control systems designed and implemented by the management are operating effectively, automatically I reduce my substantive testing. Now back to this question. Imagine we are the external auditors and we are going to rely on the work performed by the internal auditors. What if the work performed by the internal auditors are not well planned, not well performed, not well executed? And what if external auditors, we the external auditors, would assume that the controls are operating very effectively, because we are blindly trusting the work of the internal auditors? So we will reach a wrong conclusion. Once we reach a wrong conclusion regarding the strength of the control system, we will reduce the substantive testing. Once we reduce the substantive testing, there is a possibility we might not get sufficient appropriate audit evidence because we are not applying the procedures. So this could result in performing insufficient substantive testing. Therefore, detection risk would be increased. This is one of the most important and a very tricky audit risk. Let me explain it again. Imagine we are external auditors and we are, according to the question, we are going to rely the control testing performed by the internal auditors. Be skeptic. There is a risk that the control testing performed by the internal auditor, it's not well planned, it's not well executed. But if the external auditors are going to rely on them, they will reach an unnecessarily optimistic conclusion. They will be relying on the work performed by the internal auditors. What if the work is not appropriate? So as a result of that, external auditors would not apply the procedures which they should. and as a result of that, detection risk would increase. So you are not going to write about certain financial statement items in the impact. You will write that therefore the detection risk would be increased. Is this clear now? Because this first risk is one of the most difficult one. Now, those who are wondering this is too lengthy, guys, this whole yellow portion, you don't have to write it. You don't have to type it. You don't have to type this entire yellow portion because this your time will be saved. So you don't have to type why is it a risk. You don't have to type explain. You don't have to type this portion. You have to type only this portion. If reliance is placed, so this is very much doable. I think this is very much doable. And even if you could end up producing 70 to 80% of it, still you will score full marks. So what about the response? Well, the external audit team should meet with the internal auditors. We should review the work performed by the internal auditors. We should evaluate what assumptions, what methods they have used. And on a sample basis, we should re-perform the work performed by the internal auditors. So we are not going to blindly trust the work performed by the internal auditors. So I'm done with the first risk of, first audit risk. And mind you, the first risk was actually a detection risk, not a risk of material misstatement. Guys, the first risk was new or old? The first risk was old or new? Okay, so many students are absolutely convinced that although it is a difficult one, although it is not a very common one, but still at the end of the day, this is an old one. So Kiran, uh, Martin, Almas, everyone, it's a humble request. Just keep a record, and that is which how many are old and how many are new out of the 10. By the way, we need 8, right? In total we need 8, but out of the 10 you have to keep a keep a track. Okay, let's move forward. The first one was really difficult. Second one, in May 20x5, that is during the year. Mind you, today is 1st July. Mind you, the client's year end is on 30th, 31st August. In May 20x5, that is couple of months ago, that is during the year, a fraud was discovered in the finance department. Following an investigation, the finance clerk at the company was found to be responsible and was dismissed. Let me complete the paragraph. As a result, the remaining members of the finance department have been allocated additional tasks until a replacement finance clerk can be appointed. So no replacement finance clerk has been appointed as of now, and the remaining members have been overburdened, and this has led to a backlog in the processing of some accounting records. Guys, let's talk about the second one. In May, a fraud was discovered in the finance department. There is a risk that not all the fraudulent activities have been uncovered as of now. What if there are multiple other fraudulent activities which are yet to be discovered and yet to be adjusted and accounted for in the financial statements? So as a result of that, there is a possibility that the profit is still overstated. Why? Because certain other elements of fraud needs to be accounted for. So this is a very common risk of material misstatement, which is available in multiple questions such as Sika more and many other questions. So guys, let's check out the second one. Now, this yellow portion is something which you will copy from the question itself. This is your step number 1, where you have identified the risk. In May, a fraud was discovered. Following the investigation, the clerk was found to be responsible and was dismissed. No problem with that. Why there is a risk? There is a risk that not all the elements of fraudulent activities and transactions have been fully identified, and certain items still needs to be identified and written off. If those items have not been uncovered as of now, the financial statements could be materially misstated. The financial statement could still have material misstatements in the financial statements. For example, most importantly, the profit would be overstated. So why there is a risk? Always express your doubt. My doubt is, okay, four frauds have been discovered. What if there are four more? What if there are two more? What if there are 10 more? So this is why is it a risk. And as a result of that, the financial statements could be materially misstated, especially the profit would be overstated. What should be the response? Well, as an auditor, I should have a discussion with the finance director regarding the fraud. I need to have a discussion with him and I need to understand how was the fraud planned and executed by the clerk and what actions have been taken by the finance team, including the director, to identify the fraud and to prevent such frauds in the future. I need to understand the whole mechanism of investigation so that I'm sure and confident that yes, all the fraudulent transactions have been uncovered. Maybe after discussion, I might realize, guys, they don't know a thing. Maybe more frauds are yet to be discovered. So this is the response. So is it old or new? Yes, Tajal, you are absolutely right. Yes, sir, this would be a risk of material misstatement. Yes, you are right. Sir, can we write there is a control risk? Well, you basically this is a risk of material misstatement because of the control failure. So you are right, but you don't have to discuss a lot in relation to the control risk. But you are right. So I've got approximately 10 plus answers saying that it's an old one. Well done. A brilliant student would, you know, would prepare all those points which are old, and you should be so well prepared that you could remember. In my master file, I always mention that this risk belongs to that question as well, that question as well. Okay, let's continue and let's go for the third risk. Guys, what about the third one with the green color? I just wanted to differentiate it. So with the green color, this has led to a backlog in the processing of some accounting records. The remaining member of the finance department have been allocated additional tasks until a replacement finance clerk can be appointed, and this has led to the backlog. Now, what happens when there is a backlog? Well, first of all, this increases the inherent and control risk as errors may have been made in the accounting records by the overworked finance team. Guys, when a certain team is overburdened, they are overwhelmed, when they are overworked, they are bound to make silly mistakes. They are bound to make human errors. So first of all, considering the fact that the remaining member of the finance team are overburdened and overworked, there is a possibility that they might be making errors, and as a result of that, financial statements could contain material misstatements at the end of the year. So is this clear? Please try and understand. Let me take it easy. If we are the bunch of remaining members of the finance department, and if we are overburdened, if we are having an overwhelming level of workload, there is a huge possibility that we might commit errors because of the overburden, because of the overwork, and as a result of that, there is a possibility that the year-end financial statements could be materially misstated. Again, this is a risk of material misstatement. It's a difficult one because it's not about a particular financial statement item. It's about the overall financial statements could contain material misstatements because of what? Because of the overburden. What should be the auditor's response? Well, as an auditor, I think I need to increase my substantive testing in relation to the work performed by the finance department. I need to make sure that I will review the team members of the finance team just to evaluate whether there are experienced members available. Because if there are no experienced members available, uh, I need to make sure that overall I would come up with an experienced audit team because the risk is on the higher side, and I will apply extraordinary tests in relation to the work performed by the finance team just to trace and identify any material misstatement because the risk is on the higher side. So more experienced audit team Along with that, more or increased testing should be performed. So that's the summary of the auditor's response. More experienced audit team because the risk is high, and more substantive testing in relation to the work performed by the finance team because the risk is on the higher side. Okay, in experienced resource who follows professional skepticism at all times appointed in order to mitigate the risk. Moreover, extra procedures need to be applied or extensive testing should be performed. Well done. Guys, so this one is a new one or an old one where the finance team is overburdened and overwhelmed. Is this a new one or an old one? So if you have covered my lectures in relation to the top 10, this is another old audit risk. Well done. Let's go for the third one, or well, let's go for the fourth one. Fourth one. During the meeting, the finance director provided some forecast financial information which indicates that the operating profit margin is predicted to increase from 12% for the year ended 31st August 20x5 to 17% for the year to 31st August 20x5. So the operating profit margin would increase. The audit file for the previous year's audit include details of an adjustment which was required to operating expenses resulting from incorrect cut off of selling cost. So last year they made a blunder in relation to the cut off of selling cost. If a similar blunder or if a similar mistake is available, or if a similar mistake happened in this year as well, there is a possibility that the selling cost is understated for the current year, and as a result of that, operating profit is overstated. So this is something which is another risk of material misstatement. Let's see the numbers, they do not add up. The cut off issues relating to the selling cost. Why there is a risk? The cut off issues relating to the selling costs identified in the previous audit may not have been resolved, or a risk that operating expenses may have been omitted. What if the adjustment has not been made correctly? What if certain expenses have been omitted, and as a result of that, the selling cost would be understated, the expenses would be understated, the accruals would be understated, and the operating profit would be overstated. So this is another risk. And if this is the risk, I would have to review the previous year's audit file, and I need to understand how the cutoff error was made and how it was resolved, how it arose. I need to discuss this issue with the management, that what steps they have taken to ensure that the similar issue does not happen in the current year. So if you could amalgamate these 2 points, you will end up scoring 1 complete mark. You don't have to write the next one. Now, is this new or old? Is this new or old? You have to refer to my top 10 and you have to let me know, is this old or new? If you have covered my top 10, you will realize that there are multiple questions where the company's gross profit margin has gone up and the operating profit margin has gone down, or the other way around. Gross profit margin has gone down, but the operating profit margin has gone up. So we call them, there is a risk of misclassification of expenses. This one is slightly different, the fourth one. There is a cut-off error. Maybe the previous year's error has not been correctly adjusted. What if they have omitted certain expenses? So I would say, yes, it is similar to those one, but overall it's different. So yes, let's call it a new risk, which is about the cut-off error. So far we have covered 4 audit risks. 3 of them were old for sure. 1 of them was new. Let's go for the 5th one. In December 20x4, that is during the year 5 months ago, the company began making online sales directly to the general public via the company's website. Online transactions should be automatically recorded in the company's accounting system via direct link with the website. Okay, that's great. During the first few months, however, there were some technical issues, meaning that the website sales were not automatically recorded in the accounting system. I am dead sure that this one is new or old. So the client has created a website. The website is directly linked with the company's accounting system. But for a certain period, maybe to begin with, in the first few weeks, the website was not fully integrated with the client's accounting system. So there is going to be a risk that that certain sales have not been fully recorded and the year-end sales could be understated. So this one is for sure, it's an old risk. If the website sales are not automatically captured or recorded, there is a risk. I'm the auditor. I'm being skeptic. There is a risk that certain transactions have been omitted, have been missed, and as a result of that, year-end revenue could be understated or incomplete. So there is a risk that the year-end revenue could be understated and the receivables would be understated as well. So it's a very easy, to the point, simple risk. We will identify the information from the question paper. We will identify the information from the question paper. Once we have identified the information from the question paper, we will just simply say that there is a risk that certain sales have not been properly captured, and as a result of that, those sales have not been recorded, not only leading towards the risk of understated revenue but also understated receivables. So that's the impact. This is why there is a risk. What about the test of control? As an auditor, I need to apply a lot of control testing over the company's revenue. Especially, I need to use the test data where possible. I just need to make sure that the website is truly operating effectively. It is truly aligned with the company's sales system and it is not missing any single transaction whatsoever. So I need to ensure that the controls are operating effectively. Moreover, because we know that there were for few months the system was not operating effectively, as an auditor, we need to apply extensive substantive testing over the company's revenue, because the completeness of income is a question mark over here. So this is an old one. So we are done with the 5 audit risk. Yes, you can use cats. You can say that we can apply dummy data. Well, not exactly. Yeah, you can. You just have to apply dummy data just to figure it out that sales system and website are truly integrated. The website genuinely captures every transaction and it genuinely integrates with the company's sales system. Yes, you can use test data. Okay, so let's go for the 6th one. The company values inventory in line with the industry practice, which is to use selling price less average profit margin, which the director considered to be a close approximation to cost. The company receives a trade discount from its main supplier, which is linked to the total amount purchased. In accordance with the supplier contract, the amount is reclaimed after the year end based on the actual volumes purchased over the year. The company is expecting to include a receivable in relation to this trade discount of $980,000 at the year end, along with the corresponding entry in the cost of sale, which relates to goods which will have been purchased by the year end. Okay, so this is a huge paragraph. This has got 2 risk of material misstatements, and I truly believe that both the risk of material misstatements are old. First of all, my client is using a technique which is selling price less average profit margin for the sake of valuing inventory. Though this technique is allowed by IAS 2, but there is always a risk that the calculations or the calculations are not correct. If that is the case, the year-end inventory would be overstated or it could be understated as well. You have got a minute, please read this. The company values the inventory in line with the industry practice, which is to use selling price less average profit margin. This is the piece of information from the question paper. Now, what about the explanation? According to IS2 inventories, this method is allowed for measuring the valuation of inventory, provided that it creates a close approximation to the cost. But there is a risk that this is not the case. And if that is not the case, the year-end inventory could be overstated or understated because both possibilities are there. What would be the response? Valuation testing should focus on comparing the cost of inventory to the selling price less margin. So I need to check it out. What is the total cost, or what is the actual cost per unit, and what is their cost per unit, which is selling price less profit margin, and are they closely approximate to each other? If yes, it's allowed. If not, I need to have a discussion with the management to change their approach. Guys, is this old or new, the sixth one? Yes, there is a risk that these calculations performed by the client are not close approximation, and as a result of that, the inventory could be either overstated or understated. Guys, everyone, this sixth risk is an old one or a new one? Have you seen this thing? Have you seen this same to same story in my top 10 lectures? Is it old or new? Okay, I've got multiple answers. Old, old, old. So far, this was the sixth audit risk, and out of the six, we only had one new. So this one was surely old. Thank you, everyone, from Almas to Azim to Martin to Manan to Teneng. Everyone, thank you very much. Let's go for the seventh one. The seventh one is your client has recognized a receivable of 980,000 because your client believes that they will actually get a trade discount. Is this the correct accounting treatment? Is this the correct accounting treatment made by the client? The receivable which the client has recognized of 980,000 is based on the assessment that the company would end up making such level of purchases. I am the auditor. I will not trust this. I will say there is a risk that the actual purchases would be different, or the actual once the annual purchases from the supplier will be different, automatically the discount would be different. Your annual purchases could be less than that. If the annual volumes are over or underestimated, then the receivable and the cost of sale may be over or understated. So I believe that your calculation of 980,000 could be understated, it could be overstated. So what would be my response? I need to first of all review the supporting documentation such as the supplier's contract with Pimento company in order to understand that what is the arrangement between the two companies. And then today is 1st July, the client's year end is August. I need to review the post year end correspondence between my client Pimento company and their supplier just to confirm that there is actual evidence of this discount which has been applied or accounted for by my client. So what is the risk? The calculation is based upon a certain level of annual purchase. There is a risk that the actual purchase by the time the year end would come up, today is 1st July, there are still 2 months to go. So by the end of the year, the actual level of purchases could be different. So as a result of that, this calculation could be incorrect. So is this a new audit risk, a new risk of material misstatement, or old one? Similar risk of material misstatement is available. Okay, Almas is asking me to repeat it. Almas, you are my audit client. Today is 1st July, and you are saying that I have made an adjustment of 980,000. I've removed it from the cost of sale because I will get that money from the supplier because I will be making certain level of purchases, and as a result of that, I will be eligible for the trade discount. And because I'm going to receive that money, I've also recognized the receivable. So I've removed it from the cost of sales and I've recognized it in the sale. So you have basically created an asset for yourself and you have de-recognized from the cost of sales. Okay. Is this sure shot certain? No. As an auditor, I think, what if your annual purchases would fall short? So you might not end up getting 980,000. Maybe you will end up getting 780,000, maybe $680,000, maybe $500,000, or maybe more than that. So there is a risk that the calculations which the client has performed based upon certain annual purchases, Those are not going to happen. What if the actual level of purchases are going to be different from this one? Maybe less than that, maybe more than that. If that is going to be the case, both the cost of sales and the receivables would be misstated. I can't say overstated, I can't say understated, misstated. So the response would be, as an auditor, I need to review the supporting documentation, such as the supplier contract between the supplier and my client, in order to understand what are the terms and conditions and on what conditions my client is going to get the discount. And not only that, I should review the post year end documentation or correspondence to confirm whether that discount was actually available or not. Is this clear? Okay, that's great. Okay, got it. That's great. This is an important one, but this is surely an old one. Okay, let's go for the eighth one. During the year, surplus fixtures and fittings within the stores were sold, resulting in a loss on disposal of $450,000. Substantive procedures, knockout punch 4, part 4, which is about disposals. If I always say, if my client has sold certain non-current assets and they were sold at a loss, a significant loss such as 450,000, that clearly indicates that the useful lives were overstated, the depreciation rates were understated, the non-current assets are overstated, the depreciation expense are understated. That is why the client is facing a loss on disposal, right? Additionally, the facilities in each of the company's distribution depot were upgraded at a cost of $620,000. Now, as an auditor, I'm being skeptic. What if that $620,000 has certain capital expenditures, certain revenue expenditure? What if those have been wrongly classified or not properly accounted for? Lastly, the company has not paid its shareholders a dividend this year, choosing instead to undertake a bonus issue of shares in April. Guys, when a company issues bonus issue, there is no cash involved. So they simply have to debit the share premium account and they have to credit the share capital account. So there is always going to be a risk that the accounting adjustments and the relevant disclosures in relation to that bonus issue are not appropriate. What if they have wrongly misclassified the equity? Because it's all about equity. You have to debit because the bonus issue has to be from the undistributable account, which is the share premium account. So guys, please tell me about these three, 8, 9, 10. Are these three old or new? The first one is about non-current assets being overstated and depreciation expense understated. Why I'm thinking like that? Because there is a loss on disposal. Second one is about the split between the capital expenditure and the revenue expenditure. And the third one is about the split of the equity. So last three are easy. All are old. So, oh, well done. So everyone is absolutely convinced that there is no problem whatsoever with respect to the 8th, 9th, and 10th. Significant gains or losses on disposals, they are the indicator that the depreciation method for the fixture and fittings are not appropriate. This is me writing why there is a risk. Now the impact. If I will end up my answer over here, I will not score full marks. Therefore, depreciation expense may be understated and the year-end non-current assets would be overstated. Why? Because there is a loss. Guys, imagine there is not a loss on disposal. There is a significant gain on disposal. I would have write same. I would have write same to same. But instead of depreciation expense being understated, I would have said depreciation expense being overstated and non-current assets being understated. Is this clear? Can I have yes on that? What if there is a gain on disposal? Are you clear? Can you write yes on that? Well done. Because if there are losses on disposal, that indicates that the accumulated depreciation is understated, which means the carrying value of the non-current asset is overstated. And the depreciation expense for the year is also understated. But if there are gains on disposal, it means the accumulated depreciation is overstated, the carrying value is understated, and the depreciation expense for the year is also overstated. So this is basic accounting that does not require your FR. Let's go for the ninth point. I'm done with 8. If this expenditure is asset expenditure, it should be recognized as part of the property, plant, equipment in line with I-16. But if these relates to repair, they need to be charged within the profit or loss account as an expense. So there is going to be a risk that certain items out of the 620,000 needs to be recognized as a PPE and certain item needs to be charged as an expense. So they are year-end non-current assets and the expenses, they are vulnerable and they could be misstated. So that's an easy one. The last one, which is an important one, I believe, just like the first one, the company has decided to issue bonus issue. A bonus issue needs to be accounted for as an increase in the share capital at nominal value and a decrease in the reserve such as the share premium. If the company has not made this adjustment properly, there is a risk that the year-end financial statement, especially the equity part, could be materially misstated. Certain item could be understated, certain item could be overstated. So I need to review the treatment of the bonus issue made by the client, and I need to agree with the share register and the share issue itself just to confirm that everything is in line with the accounting rules and with the issue itself. So this was your part B. What about the part A? I said never ever underestimate the importance of part A. The part A is about a straightforward bookish knowledge where you have to discuss the responsibilities of the audit firm in relation to the fraud. Guys, first of all, you can score a mark by saying that as an auditor, my responsibility is to gather sufficient appropriate audit evidence and to be reasonably assured that the financial statement as a whole are free from material misstatements, whether that material misstatement is due to fraud or error. So this is a very repetitive sentence. This is a lengthy sentence, but this is a sentence which you need to learn. So this is your responsibility. Now, in order to fulfill this responsibility, what if the frauds are there? Guys, if the frauds are there, they will misstate the financial statements. So in order to fulfill this responsibility, the auditors are required to identify and assess the risk. You have to identify the risk. You have to come up with certain actions. You have to come up with certain plans. You have to apply certain procedures. So auditor will need to obtain sufficient appropriate audit evidence. Auditor has to assess the risk of fraud. Auditor has to design and implement procedures. Auditor has to respond if there is a fraud, if there is a suspected fraud. Auditor has to come up with a strategy. Auditor has to remain professionally skeptic throughout the audit. And whenever there is a suspected fraud or an actual fraud, the audit team has to be more alert, more skeptic, and there has to be a discussion. So if there is a fraud in one department, all other audit team members must be well communicated. So this is a straightforward bookish knowledge which I've covered on multiple occasions in my lectures because this is a very repetitive straightforward bookish knowledge, and if you could end up producing 70 to 80% of it, you will end up scoring full marks. So obviously you don't need to write entire answer or entire points, you just need 4 points to score 4 marks. But if you could prepare 5, the first 5, I would say that's going to be wonderful. Let's talk about the last part, which is on ethics. As of now, I'm not going to discuss the part C procedures. For that, I've got multiple sessions planned. Identify and explain 3 threats which affect the company, the audit firm's independence, and for each threat, recommend an appropriate safeguard. Let's talk about first one. During a meeting, the company's finance director has mentioned to the audit engagement partner that he's keen to align the objectives of the company with the auditors. No, that's not a great idea. To assist in achieving this, he has suggested that the audit fee could be based on a percentage of the client's final profit for the year. So as an auditor, my fee would be, let's suppose it's going to be 5% of the company's profit. So if the company would end up reporting a profit of $100,000, I will get $5,000 as a fee. And if the company would end up reporting $200,000 profit, I would get, instead of 5,000, I would get $10,000. And if the company would report 1 million profit, I would get $50,000 profit. Now think like an auditor. If you are an auditor and your audit fee, which is based upon the client's profit, you will have a financial interest in the company. You have just lost your objectivity. You have just lost your independence because now you have got a financial interest in the client. Now you won't be objective anymore. You would be biased. So this whole fee arrangement suggested by the director, it's a classic example of contingency fee, which is an example of self-interest threat. And as a result of that, audit team would be their independence would be compromised because they would be relying, their audit fee would be based on the company's profit, so they would be reluctant in raising issues which undermines or reduces the company's profitability, because that would have an impact on the audit fee. So what would be the safeguard? Well, this is a contingent fee arrangement, and the audit firm and the audit partner should politely reject this proposal, and they should make them understand that the audit fee would be based upon the work, the level of work, the level of risk, and the hours and the effort we are going to put in, not based upon the client's financial outcome. Because operating profit is, at the end of the day, it's a client's financial outcome. So this is the first ethical threat which I have just discussed. Finance director has suggested that the audit fee could be based on the percentage of the company's final profit for the year. This is the piece of information which you will copy from the question. This is a contingent fee and this creates self-interest threat. This is the sentence which gives you a start. But you have to explain that how this compromises auditor's objectivity. The auditor's decision could be influenced. You are an auditor, your decision making will be influenced. You will have a greed in your mind, in your heart, by the fact that the audit fee will be increased if the company's profit would increase. So maybe you will not raise certain question marks. You will be reluctant in making certain adjustments because you want the company's profit to be higher so that your audit fee is higher. The safeguard is you need to politely reject this offer because this is a contingent fee and this is a self-interest so great that no safeguard can reduce it to an acceptable level. So you have to reject it. You have to make them understand that the audit fee would be based upon the time and the work, not based upon the client's financial outcome. Okay, let's go for another issue. The company's finance director has also requested that the audit firm provide some accounting and bookkeeping services. The services proposed would be of a routine nature. If I would perform those activities, well, once I will do the audit, this will create a self-review threat because I will be auditing the accounting records and the financial statements which I prepared. So basically, I have to express opinion on the work I have performed. So as a result of that, I would be less skeptic, less challenging. I will not admit or I will not identify my own errors. So this is the explanation. So this is a self-review threat. Now there is safeguard. Now the tricky question is whether this company is a listed company or not. Mind you, when the company is a listed company, it is always mentioned in the question. We have been reading this question for the last 1 hour approximately. I have not seen that this company is a listed company. So I will assume this company is not a listed company. As the company is not a listed company and the services are of a routine nature, the services may be provided by the firm. And then the safeguard should be put in place to address the self-review threat. For example, we need to use separate teams for the sake of those routine activities and for the sake of audit. But to be on the safe side, it's better off not to provide these services at all, especially if the company is soon going to be a listed company. So that was your second ethical threat. Now, the third ethical threat is about P company's finance director has some concerns over the financial stability of H company. He has asked the auditing. Okay, one of the P company's main supplier. Okay, my client is called P company. One of the main supplier of the P company is called H company, which is also audited by the same audit firm, by us. Due to negative articles in the press, P company's finance director has some concerns over the financial stability of H company. He has asked the audit engagement partner to inquire of H company's audit team as to whether there are any going issues which would affect the supplier's ability to continue to trade. Guys, this is something new. I think this is something which is not available in my top 10. What kind of ethical threat is that? Can you use the chat box and let me know? Yes, you have to say that this creates contingent fee, self-interest. Yes, you have to say. Use the use the chat box and let me know. No, it's not about going concern. I'm you have to listen. You have to listen. My question is, this entire piece of information is creating an ethical issue in relation to which ACCA's code of ethic, which principle is being affected over here. Whether it's about, yes, it's about confidentiality. Try to understand. I am the auditor. My name is Coronado Company. One of my client is called Pimento Company. Pimento Company's supplier is called H Company. There are multiple negative articles in relation to H company in the press. So my audit client, Pimento Company's director, has asked me that I should ask my audit team, the team which is auditing H company, are there any going concern issues in relation to H company? If I will share this piece of information with Pimento Company, it means I have breached my fundamental principle of confidentiality. So this whole situation is creating a ethical dilemma for me. I have to respect the principle of confidentiality. If I do so, this could result in the audit team of each company breaching the fundamental principle of confidentiality. Disclosures of client information is prohibited unless required by law. Does law requires that? No. As of now, no. So why would I disclose it? So this is basically a question mark on the principle of confidentiality. And if the Pimento company's finance director is going to create a pressure, this will be considered as an intimidation threat as well. Maybe they will create a pressure. Tell us about the position of H company, otherwise this and or that. So to begin with, even if you are going to miss out this portion, it's okay. At least you have to say that this raises a question mark on the fundamental principle of confidentiality. The audit engagement partner of the Coronado company should politely reject this information, and they have to say, sorry, mate. We have to respect the confidentiality. We can't share any information in relation to H company with you unless it's publicly available or unless there is a legal duty to do so. So guys, I am done with this question. There is fourth ethical threat as well, which you should do it on your own. And my humble request would be that within the next 16 hours, worst come scenario, within the next 18 hours, you must type and prepare this entire question. Maybe you want to skip the part C as of now, or maybe you want to prepare it. I don't know, depending upon how much course you have covered. I want you to type and prepare this entire question, 10 audit risk, part A, straightforward bookish knowledge, part D, 4 ethical dilemmas. You have to type them twice. The entire question must be prepared using the ACCA's practice platform, using my drafted answer twice within the next 20 hours. Next 20 hours. This is it from my side. Now, if you have got any concerns or question marks in relation to this question, Please share it in the chat box. I think there are no concerns in relation to this question. So I'm done with this question. Should we type the same answer? Exactly the same. Yes, the same. Twice. Well done. Good question. Do share the new master file. Yes, I will share it. Guys, share PDF. Okay, I will share it. Don't worry. I will share it. Guys, it's time for me to take your leave. Thank you very much. If you want to make the best use of this lecture, please don't move forward towards any other CRQ on audit risk. First of all, you have to invest 6 to 8 hours on this question. You have to type and you have to prepare the same question twice. And only then you should move forward towards the next question. As a result of that, you will be in love with the next question. And let me tell you, for the sake of, let me tell you something. I'm being very honest right now. This question was a very, very difficult question. So if you could prepare this question twice within the next 20 hours, oh my days, that's going to be a huge progress with respect to your exam preparation, because it's a very difficult question. Knight Electronics, Magpie, Lapis, Green Company, Grandstand, I don't know. All those questions are relatively easier. So thank you very much. Caroline, most welcome. Thank you, Azim. Abdullah, please share Pimento. I will. Sir, then how can check our how can check our this? Almas, what are you saying? Please write it again. I think you made a typing error. Kiran, you're most welcome. Everyone, thank you very much for your kind words. I am asking you to prepare the same question twice within the next 20 hours, and you should not write it in your own words. Rather, you should stick to my drafted answer. Okay? No. Thank you very much, guys. See you tomorrow. Take care. Stay blessed. Bye bye.